It's been nearly 6 years since I've been investing. Very soon I'm going to make a video talking about these 6 years, what I learned during these 6 years. But today I want to talk about something very important. Actually, conversation I had with a friend a couple of days ago. He was telling me that so much happened in the last 5 years. But actually, if you think about it, so much happened in the last 6 years. 2016 we had Brexit. Donald Trump became president. Then we had the trade war with China. We had the Federal Reserve System raising interest rates. We had a pandemic. We had the riots in the US. We also had the storming of the Capitol. The sky was on fire, the sea was on fire, and now finally, what do we have? We have a war between Russia and the Ukraine. So many events happened in the last 5, 6 years that as investors, we need to ask ourselves something very important. And I know that many YouTube channel that talks about investing, they don't talk about this very often. Is how do we navigate all of this? Because if you are invested in 2016 when I started, just in the S&P 500, you would have doubled your money today. Of course, I more than doubled my money because I made great returns. But I'm just telling you that if you listen to what was happening in the news, you would not have invested. You would have been scared, you would have waited, but it would not be useful for you because over the long term, the stock market is always going up. So how do we navigate all these uncertainties? This is what I want to discuss today. And I'm not sure that there is a formula to do it. You're going to read the books about investing, you're not going to see anything about how to navigate this because it's just psychology. It's something that you need to do by yourself. So I'm going to share my experience about how I did it. Maybe for you it's going to be different, so please later you can write it in the comment. Before we talk about all of this, please make sure to smash the like button for the YouTube algorithm. If you're new to the channel, my name is Ishfaq. I am an elite popular investor on eToro. So please make sure to subscribe and hit the notification bell so that you don't miss the coming videos. If you're going to invest, the most important thing you need to remember is compound interest. I recently did a video about this, talking about the importance of compound interest. Once you understand compound interest, Warren Buffett said that there are two kinds of people, those that immediately understand it and those that will never understand it. So I hope you're in the first kind of people, those who immediately understood compound interest. Because once you understand compound interest, you're not going to worry what's happening. There is a war in the Ukraine, you won't worry about oil prices, about interest rates, about inflation. All of this won't worry you as long as you understand compound interest. So today let's look at the formula for compound interest. What do we have in it? We have the principal investment. So the more money you can put, you can start with, the better it is. So let's say you don't have money, it's okay. How do you change that principle? You can add more investments continuously. So continuous investments is always better than just a one-time investment. So investing continuously, not caring about what the market is doing, is a great investment strategy. This is something you can do. How do you increase the returns further? By investing for the long term. So the more the time factor will be in this formula, the better your returns will be over the long term. And finally, one way you can increase your overall return is to increase your annual returns. And how do you do that? Instead of aiming for 10% returns, which is the average market returns, you can aim for 12%. It is by doing your own research, doing your own analysis, being a defensive investor. Now, if you want to be an enterprising investor, you can even aim for 15%. Or if you are Warren Buffett, you can even aim for 20%. But what's important is that you're invested, because even at 10% average market returns, you're beating all these people who are saving. You're beating all these people who are taking unnecessary debt. So even at 10%, because of compound interest, you can become a millionaire. It's going to take you a few decades, but you can do it. Of course, if you are better, at 12%, you are going to be a millionaire earlier. But what's important here is that you understand that concept of compound interest itself. Now you may be asking me, so what happens if there is a war, if there is something happening, a crisis, everything is crashing? Because let's remember 2008, the market crashed by over 50%. So if you were invested back then, even if you're taking compound interest into consideration, let's say you're investing for your retirement and you retire in 2008, just on the eve of you going to retire, the market crashes and now you retire, you have 50% less of your investments. That's why it is important for you to have a properly diversified portfolio. Today we are not going to talk about this, but if you are doing your research, instead of you just investing the S&P 500, you can do your research and look for stocks that have low correlation with the S&P 500, with the rest of the market. So you can invest in different industries, different countries, different sectors, or you can invest in different asset classes if you're interested in this. This is not really something I recommend in the current environment we are. And even all these assets, you will see that they increase over time. Over time, all these assets are increasing. Even bonds are increasing over time. Even in the low interest rates environment we are today, if you want to have a portfolio, let's say 80% in stocks, 20% in bonds, there is nothing wrong with that. But you constantly invest. So when interest rates increases, it's better for your bond part. And then maybe you can shift more into bonds. So what's important is that you stay invested. Let's forget about the bonds, about gold for a moment. Let's just focus on stocks because that's what I like the best. And let's forget about investing in other stocks. Just look at the Dow Jones Industrial Average. This is a chart I really like. The last 120 years of the Dow Jones Industrial Average. Since its inception, you will see all these events that have been happening. There has been First World War, Second World War. We had the crash, the Great Depression in 1929, but it did recover. So for all these people who are focusing on the long term, they did not worry about this. In 1987, the market crashed in a single day by 22%. Out of nowhere. But what happened? It recovered later. There was no recession following that 1987 crash. It recovered. And to paraphrase Warren Buffett, never bet against America. So you see, over the long term, America is always going to do great. You need to keep being invested in the market. Now maybe you will say, okay, maybe there is a war, I should take my money away, wait for the war to pass and then invest. That's something that many people are actually doing. That's why you will see the market is not doing so well in recent weeks because of this war. People are worried about what's happening, so they will prefer to invest in gold maybe and move away from stocks. But you cannot time the market. Let's just look at this random chart. We can this month ends in 2012, from 1980 to 2012, but it doesn't matter. You can use a more recent one. Actually, I saw a more recent one recently, but it doesn't matter. What matters is what it is written there. That if you invested during that period, how much you would have made. But if you miss the 5 best days, you would have only 64% of the total returns by missing the 5 best days. And most of the time, the 5 best days are next to the 5 worst days. Because this is how the market works. Some days it's going to gain 0.5%, the next day it loses 0.5%, another day it gains 1%, the next day it loses 0.8%. But overall, these small changes, one day up, another day down, the market is random. If you just look at it like this, on a weekly basis, the stock market is random. Even on a monthly basis, you can see that the stock market is random. But over the long term, you will see that it makes a difference. There are more positive years than negative years. And overall, the positive returns are bigger than the negative returns. So that's why the stock market is a winning game. It is always going to be a winning game. Even in 1929, when we had the crash, but still, you did not have to invest in the S&P 500. You could have invested in stocks that were undervalued back then. That's when this book was published. That's where Warren Buffett started investing. That's when many great fortunes were made by people who invested during the Great Depression. Even in 2008, we had a big crash. People who invested back then, Warren Buffett, so many great investors, they made great fortunes. And even in 2020, we had a crash during the pandemic. But what happened? Everything recovered. Many people were waiting. They were waiting for a further crash. They were worried about the pandemic, but I took the opportunity and I invested. And this is what you should do. You should keep being invested in the markets. When the market goes down, there are more opportunities to buy. When everybody's selling, this is when you take the opportunity to buy. I know it may be difficult to stay focused when there are so many things. That's why I tell you, don't listen to the news, don't watch the news. I have not recorded the video yet about what's happening in Russia, Ukraine. It has been 6 days since the invasion and I have not recorded a video yet. I know I will post the video about Russia-Ukraine first before I post this one, but still I'm telling you why I did not record a video yet. Because there are so many uncertainties right now. Everybody is giving different opinions that I don't know what to do. I'm just waiting for some more information. then maybe I will give my opinion. I do have one investment in Russia. I will talk about it tomorrow. Tomorrow I will certainly record the video. But there is no need to rush about anything. What you need to do as an investor is not watch the news. You should read books, security analysis, go for a walk. If you live near the beach like me, go for a walk on the beach. It's better for your mental health. Don't worry about what's happening in the short term in the market. Focus on the long term. And one way that you will worry less is by focusing on fundamentals. Because if you're buying great businesses, what should you worry about what's happening? I know about Polymetal International. This was a great business, but things happen. And I lost 80% on Polymetal International. It was a great business, but bad things will happen in the market. What matters is that over the long term, more good things are happening to you. So if let's say I'm invested in Apple, I have been holding Apple for 6 years. I'm not worried about Apple. What's happening? There is a war. People are still going to buy iPhones. I'm not worried about it. I have UNFI. I'm not worried. People are still going to need food. I have Genworth Financial. This is an undervalued stock, a deep value stock. So I'm not worried because I know there is such a big margin of safety, whether there is a war or not. Eventually, I believe the market will realize that there is a market inefficiency there. So this is what I'm focusing on. I'm focusing on the long term, that the market is a winning game. The stock market is a winning game, so it doesn't matter what happens in the short term. I'm focusing on compound interest over the long term. As long as I keep investing consistently, I should not worry because my returns will be here. And I focus on fundamentals because fundamentals are really being affected by geopolitics, by macroeconomics. So this is what you need to focus on, not about the noise. So let me know in the comments, how do you navigate these uncertainties? Thank you for watching this video. Please like, subscribe and share. Please watch these two videos if you have missed them. Have a nice day and goodbye.